So I make a decent amount of videos recording the market internals and how the market has reacted to all the internal data that I chart out on the indicators that I have published on TradingView. One of the indicators that I published was something very similar to VWAP, but instead of using volume, it uses the strong tick reactions. Now, typically I use it anchored to the session, but I do make references off and on throughout the week or day, anchored to the weekly or the monthly. But over the past couple of weeks of using the session TiWAP and doing some back testing and different chart studies, I've found a particular method, advanced method of using the session TiWAP data from the previous day into the next day. So the main aspect to this is to take each standard deviation line, however many you use. I would recommend at least the deviation, first and second deviation, and take those levels from the previous day and plot them into the next day. So on this day, you can watch this price action around these particular levels here. And the one trading plan that I'm starting to develop and backtest is to trade off of the first deviation breaks after a retest. So basically right here, you could buy 100 shares and your profit targets would effectively be the previous day's TiWAP levels. So after this full expansion of full day's worth of data, and your stop loss would be the TiWAP itself for the current day's session. So if you see a close below that, that would be your stop loss. And it's rather interesting, and you can find trim spots however you want, right? So we have this previous high that was made intraday, so maybe you sell out. So maybe you sell out half, when you hit this previous high a day. Now, technically, we touched our profit target, so you could get out. I didn't do it right, but you get the idea. So I back tested this for the entire week, and it was incredibly effective. Another thing that I have noticed as well with this is that if the current day's price action is in the previous day's high deviation from that day's mean, you can almost expect a little bit of retracement somewhere back into that previous range. So effectively, you would have a short entry right here with a break below, back up above, back below again. And then this time, if you're short, you don't want price to come back above TiWAP. That would be your stop. Profit targets are all these levels below. And you can see how effective this was. So we use these first deviation breaks as a statistical significant action from the price, and we try to follow that as a potential new trend being made. And on a lot of these days when I'm doing this, I'm noticing that once you find the actual trend for the rest of the day, you don't typically see a retracement back to TiWAP. So I'm not going to replay the entire time frame here, but if we review the next days following that Monday, this past Monday, we have similar price results. So this one here would be a loss, and we have a couple of winners here. So this was mostly a break-even day, but here's a fantastic example of a first deviation break, retest, break again. You get in and you're basically short for the rest of the day, and you would capture, depending on how much you purchased, if you were short, you'd at least be capturing about $2.16 movement. And at some point during the day, if you're holding this that long, I can't really do it with this tool, but you can see that your stop is well within profits. TiWAP is your stop. It trails down for you, and eventually you're well halfway, 50% into your profits for your stop, for your risk, which is fantastic. If you manage to hold through many different second deviation low taps, you would definitely be seeing some handsome profits here. Turning the third deviation on, I don't see any taps. Well, you see some taps here. So those could have been signals as well. But then the next day, you get much the same result, where we see a break. The retracement takes a little while because as tick creates more hikes up in price, it's moving those bands. We do get a retest here. You could even argue that the next one's not until here or here. But either way, you're basically holding this for the rest of the day. This is not a stop. This is not a stop out. We didn't close below. We did wick it. It maybe wouldn't be fun. But then you see roughly here by 12:30, we're actually minimizing our risk to within profitable range no matter what. So quite comfortable. And this is not a recommendation to trade this way. I'm just demonstrating something that I have found myself to be potentially significant. I've only back tested this last week. Absolutely, you do your own trade plans and you manage your risk however you're doing for yourself. Here's another day though where we had a breakout. We do a retest. I think Friday was, I want to say Friday was a loser. Here we had a breakout and a retest. Set your stop. And I believe Friday was most likely a loser or break even. You would have gotten a trim here potentially at 75 cents. And then you'd be stopped out the rest at 63 cents. So it's a tough break there. That was about the only trade on Friday, if you were following this particular concept. But again, even if you're not trading it and you're just using them for levels, look at how effective these levels are. They're bouncing right off, rejecting cleanly right off of these. Fascinating stuff. You could couple this with the MIT indicator below that I use for my market internal review videos. If you watch any of those, you're already well familiar with that. And you can use these as a potential setup. Use this for some confirmation. Just a quick video on a potentially advanced way of using the session TiWAP. Hope you found something in here useful. Happy trading.